Hey everybody, thanks for tuning in to the Pulver Report, where we trade to be profitable, not perfect. Today's segment is probably the most important lesson in trading. But even saying that, most people don't pay attention to this until it's too late. So please don't be that person. Okay, watch and listen to today's lesson. I am telling you, you will thank me for this when your bottom line is protected and it's process above all else in your trading and investing. So you might be asking, what the heck is the super important or most important lesson? It's equity management, all right? But this isn't some boring lecture from Ben Stein on how to calculate risk-adjusted returns, all right? I'm bringing the passion today because this is one of the key differentiators between successful traders and unsuccessful traders. It doesn't matter what financial instrument you trade. Stocks, options, futures, Forex, cryptos, it really doesn't matter to me, okay? When you stick around long enough to survive these markets, you will gain an invaluable amount of market knowledge. You'll be flexing your trading muscles. And after hundreds of demo trades, hundreds or even thousands of real trades, you'll gain the process-driven confidence and be able to protect your capital, grow your capital, and ultimately reach your financial goals, right? If you haven't realized it, trading is a game of attrition. The financial markets do not care. They don't care if you win big or lose big, all right? Let's think about it. Do you think that the crypto market cared when people took stimulus checks and let it ride on Dogecoin? Okay, in 2020, $100 in Dogecoin was worth over $20,000 at the peak at 73 cents. How about stocks? Do you think the stock market cared when people bet the farm on GameStop or AMC, even if it was too late? No. Okay, you've got option traders that are bargain shopping back in 2019 that made fortunes. You have day traders that had triple-digit gains. But you know what? Somebody owned shares of GameStop at $475, right? And they might be stuck in that trade with horrible timing. The market doesn't care. How about the Forex market? Do you think the Forex market cared that I was in 23 bullish positions on the dollar CAD from 1.20 to 1.26? Look, I'm just listing different asset classes, all these different amazing opportunities for exponential returns. But what's truly important is, what does the downside look like? If Dogecoin went to zero the night that Elon Musk hosted Saturday Night Live, does that change your life? If AMC truly went bankrupt and went to zero, are you out in the streets asking for help? Okay, trading involves risk. And as glamorous as it might seem to be on your phone and your laptop anywhere in the world, losses will happen. What's important is that we survive them, all right? We can always find another trade. In fact, we should find another trade, because dwelling on the loss is only going to make it worse, all right? Is trading truly a zero-sum game? Someone always wins, someone always loses. Yeah, sure, but which side are you on? Okay, statistically, listen to this. Most traders actually average a 50 to 55% win rate, but yet 90% of traders lose money or quit trading. Traders and investors need to accomplish two things, okay? Two things to have the best chance of profitability. Number one, win bigger than you lose in dollars. And number two, win more than you lose in win percentage. All right, think about it. Let's break this image down. Okay, this picture shows the relationship between risk to reward and win percentage. So for the trader that favors reward to risk, anything greater than 1-to-1 provides a buffer where you don't have to win very often to be net profitable. Right? To me, when I teach traders, I'm teaching the sweet spot, the 3-to-1, the 2-to-1, anything greater. Realistically, anything greater than 1-to-1 is good. But that sweet spot is that 2-to-1 and that 3-to-1. Do you want to know why? I tell traders this all the time. A 2-to-1 reward to risk ratio requires a 34% win rate. 34%, okay, and you're making money. And so in my opinion, I think it's fair to say that with proper spatial awareness, a little bit of technical analysis, and we place trades only when we are confident in the setup and the outcome, we're going to be just fine, right? Maybe these confident setups will help you yield that 50% win rate. You do that with a surplus and a 2-to-1 reward to risk, you are on your way to being profitable. So let's do a simple example breaking down the numbers. If you risk $100 for a loss and you make $200 for a win, let's take a sample size of 100 trades. So we have 50 trades losing $100 each, which means we're down $5,000. But we have 50 trades winning $200 each, which means we're up $10,000. Did we make money? Yes, we did. How about another example? Let's take down that reward to risk ratio. For every loss, we're going to lose $100. For every win, we're going to win $150. Now our losses add up to $5,000. Our wins add up to $7,500. Are we making money? Yes, we are. Okay. I'm going to take it one step further. Here's actually a look at one of my live track records. Okay. This is a live account. It's third-party verified. And I am very specific with how I trade this account. All right. I want to show you the tail of the tape. Now, if you want to, you can pause this video. You can look at every line item on the screen. And I promise you, it's a very real account with a live track record. Okay. I've logged over 1,000 trades with this account. And what did I say earlier? What are the most important boxes that I need to check to give myself the chance to be successful? Number 1, do I win bigger than I lose in dollars? Number 2, do I win more than I lose with a win percentage? Okay, do I have a decent win percentage and or do I make more in my wins and losses in dollars? Let's take a look. My average win is $92.38. My average loss is $85.26. So it's not a massive surplus, but enough to say that over the course of 1,000 plus trades, I have an edge with my wins. My win rate, I win 78% of my long positions, 74% of my short positions. So let's crunch the numbers. Let's take a sample size of 100 trades. Okay, I'm going to take the average 78%, 74%. I'm going to have an average win rate of 76%. Out of 100 trades, okay, just a sample size, 100 trades, I have 24 losers at $85.26 each. I have 76 winners at $92.38. Okay, my total losers cost me $2,046. My total winners give me $7,020. That is nearly a $5,000 surplus for that batch of 100 trades. Okay, and I've logged over 1,000 trades. So take that $5,000 surplus, 10 times that, that's my total amount of trades. The count is doing just fine. But I want you to notice how I do it. Okay, I know that this isn't an account that has massive wins in dollars, but it is an account that has a very high win percentage. Okay, I'm very patient. I am precise. I choose my trades very carefully on that particular account. Okay, and I can spell all this out for you. All right, but what I recommend is that you look at the numbers. Okay, what does your account show you? Okay, what type of third-party metrics, like MyFX book, if you're trading Forex, what does that show you? Look at your broker statement. What does that show you? I've had thousands of one-on-one sessions with traders all over the world, reviewing broker statements, track records, just like I showed you. Okay, and you know what? It's pretty easy when you're looking at the numbers to see where the flaws are if you're not making money, right? Do you win bigger than you lose in dollars? Do you win more than you lose in percentages? Not if, but when you find a way to trade with these two items in mind, trading becomes a process, okay? And the results are black and white. I make money because I'm doing one of those two things, right? And in reality, I'm always trying to do both of them. I know myself as a trader. In my manual trading, I'm trying to win as much as possible. I want the highest possible win rate. In my automated trading, I trust the algorithm. I trust the trades that I've tested and the robots that I've tested. I know that my robots will lose gracefully, but I expect them to win, right? I have robots that win 60 to 70% of the time. I also have robots that win 45 to 50% of the time. In order for the robots with the lower win percentage to make money, what do they need to do? Okay? They need to win bigger then they lose in dollars, right? You see, you're getting it. So it's these two key things, and these little tweaks can go a long way, right? Maybe the difference is this. Maybe the difference is you have to wait for your favorite setup. Okay, just look a little bit harder. Check out other asset classes. Look at other currency pairs. Okay, maybe the difference is rather than jumping from course to course, from system to system, focus on structure, focus on support resistance, buy low, sell high, eliminate risk, and go after a surplus of profits, all right? So as I'm doing this video, I'm hoping that this information sticks. Like I said, it's not exciting, it's not glamorous, but this is what real trading is all about, okay? Real trading, and the expectations that probably all of you have, is you want to make money. And I'm giving you the two key things to see. Every trader that I've ever met that's successful does those two things. Look, I am no different than any other trader out there, all right? We all have to start somewhere. And trading is absolutely, unequivocally, an acquired skill, right? It is a learned skill set. Is trading easy? No. Is making money guaranteed? No. But can you find a way to flip the script and change the narrative? Instead of being the 90% that fails, can you be the 10% that actually makes money? And I think you can. But it's not going to happen with luck, okay? Sustained success is not going to happen with luck. You have to want this. You have to want this badly. You have to stay open-minded. You have to stay humble. And you can't quit. I think the true reality of these 90% of traders that lose money, they don't actually lose money. The reality is they run out of time. They walk away. They run out of capital, right? These are the type of traders that are just getting started, have no barriers to entry, and they go big. They lose big, and they don't have enough time or capital to keep trading. So what do? They quit. Wasn't for me, I lost money. I'm going to go do something else. Okay. You are passing up on the most lucrative side hustle, hobby, skill in the world. The biggest wealth generating instruments are the financial markets, compounding gains, right? And to just turn your back and say, I had a bad run, I'm not going to do this anymore. Don't quit. Don't quit. And you don't need a lot of capital to get started, okay? You don't need tons of money to get started, but you have to give yourself time, right? It's okay to take 3 months, to take 6 months, to take a year to learn something. The accelerated path to learning how to trade is to get in the markets, get your hands dirty, and do it on the cheap, right? Trade paper money, trade demo accounts, trade super small for pennies on the dollar, and just survive long enough to see the patterns. There is a fantastic book. The author is Gregory Zuckerman. The book is called The Man Who Solved the Market, and it's about Jim Simons and his quant trading funds. Okay, Jim Simons, I didn't know it at the time, but he's like a hero to me, okay? He is one of the most successful traders in modern finance. Jim Simons averaged 66% year over year and generated over $100 billion over his career. There is one very important line that stuck with me in that book. Okay, this is what Jim Simons says. There are patterns in the market. I know we can find them. All right? So find your pattern. Find your favorite pattern. Find your favorite setup and know the risk to reward that comes with it. If that pattern gives you an edge, even if it's 51% with the same risk to reward, trade it 2 million times and become a millionaire. If that pattern wins 40% with a 3-to-1, trade it 333,000 times and become a millionaire, okay? Trading is a learned skill. Trade stocks, trade options, Forex, cryptocurrencies. Know what you're up against. Know the market that you're trading. You have to accept the challenge. Acknowledge the risks. We all do, right? This time around, after a solid decade of full-time trading and working with thousands of traders, different asset classes, all over the world, I've heard a lot of problems, okay? I've heard a lot of excuses. But guess what? The market doesn't care about these excuses, right? It might suck to lose. It does suck to lose. But if you can step away for the day, and live to trade another day. It's just one trade, okay? One trade should never define who you are as a trader. Do you expect to place one trade that allows you to retire with riches? Do you expect one trade, one losing trade, and all of a sudden you're selling your car and your house to cover your losses? I mean, come on. Be realistic. Trading is a grind. It's a bit of a grind. It's challenging. It's extremely rewarding, okay? But it's a learned skill that is recession-proof. So for today's video, I hope people finally hear me, right? You may not take this seriously until you experience awful losses. And then all of a sudden, equity management becomes really important to you. But I'm telling you right now, if you can establish good habits with good equity management, the process of building that capital and that smoother equity curve and committing to the process gets more and more attainable. I know that losses will happen. You should know that losses will happen. But what I'd like for any trader out there to realize is that a loss, a single loss, does not define you. Okay? It's not the reason that you quit. It's not the reason that you can no longer trade. So accept the risk, accept the loss maturely. Calculate the risk, move on, focus on winning. Calculate your risks, manage your winners, manage your winning trades to the best of your ability. Most importantly, keep trading, okay? Care enough to stay in the game and give yourself time and capital to learn. Here's what I think it's about. I think it's about embracing the process. I think it's about embracing the suck, right? Which is another great book. This book is by Brent Gleason. Okay, it's on Navy SEALs mental training. Embrace the suck. It's the little things. It's the sucky things. It's being comfortable with being uncomfortable. But I know this. I know that every one of you out there watching this video can do it. Okay, I've seen traders report amazing profits month after month, year after year in my trading rooms. And as long as I'm trading, I know that if I can generate these profits in these markets, so can you, right? And if you want to trade with me and trade with thousands of other traders, we all have the same goal: to see it, protect it, and collect it, right? So the Flex fam, Equities on Demand traders, thank you all for your support. We will keep fighting the good fight. If any bit of this video resonates with you, let me know and give me a thumbs up, okay? Leave me a comment. In fact, do this. For this video, I want you to type in the phrase, leave me a comment that says, process equals profits, okay? Embrace the suck, because it's the type of mindset that we could use to stop making excuses and go out there and do it. So leave me a comment, process equals profits, to show that this video actually means something, that you actually care about sustainably growing your account, keeping your capital, and focusing on the process, because profits come as a byproduct of a proper trading process. And maybe this process for you takes a month. Maybe it takes a few months. Maybe it takes a few years. But I promise you, the juice is worth the squeeze, okay? So look, see it, protect it, collect it, everybody. Be sure to subscribe to the channel, okay? Click that thumbs up button for me. And you know what? Do me a favor, okay? For the YouTube algorithm, the thumbs up goes a long way, comments go a long way, but you know what? Take this video and share it with somebody, okay? It doesn't have to be about trading. Anything that you want in life is worth working for, all right? I wanted to be a trader and investor from a very early age, and I worked my butt off to be where I am today, right? It's a learned skill, and I have every bit of confidence that if you want to do it, you can. If you need help, let me know, okay? You want to trade Forex? Flex Trading Room. You want to trade stocks and options? Equities on Demand. You want to see some live trading? Come to the Pulver Report on Mondays and Fridays, okay? We can do this. I know you can, all right? So, thanks for watching. Until next time, happy trading, lots of profits. Take care. Thanks.